All right. Are we ready?
So ready. So ready.
Yeah? Perfect.
We're a go.
All right. Well, welcome back to Wine and Realty 614.
Yes. Here we are.
Here we are. I'm Amanda.
I'm Jenny.
And we also have a lender here with us. Do you want to introduce yourself?
Hi, my name is Jeff Smith. I'm with First Ohio Home Finance. I've been in lending for 15 years and real estate for 25.
Welcome.
Yay!
How are you today?
I'm doing really well, thank you.
So the drink of the day is Prosecco.
Mm-hmm.
How is it?
Delicious.
Cheers, everyone.
Cheers.
Cheers.
So our topic of today is going to be, we're going to give you a quick, a brief description of loan types, and then we're also going to talk about some down payment assistance programs, because I know that there's a lot of first-time home buyers out there that have some questions about it. So Jeff, can you explain what's an FHA loan?
Well, an FHA loan is a federally government-sponsored loan. It is usually used for people who have lower down payments or lower credit scores. You can qualify for an FHA loan with as low as a 580 credit score.
Okay. And what's your down payment look like?
And a down payment is typically 3.5%. You can put greater down payment than that, but 3.5% usually gets it done.
Okay.
3.5%.
Mm-hmm.
Yeah. So
It's
3.5.
minimum, right?
Yeah.
That's the minimum, yes.
For an FHA loan. And then we get into a conventional loan, which the down payment's a little bit more.
Yes, unless you're a first-time home buyer. If you're a first-time home buyer, you can qualify. There's usually income limitations too, but you can qualify for 3% down. But typically, the minimum down payment on a conventional loan is 5%.
Okay.
5 to 20 typically.
5 to 20. 20% eliminates any need for PMI, which is private mortgage insurance.
Mm-hmm. And then, but you can always pay that off. I feel like that's a different topic though.
Which we may get into today at some point.
And then with a conventional loan, does your credit score have to be the same?
Well, the credit score typically has to be 620 and above, and more likely 640 and above.
Okay.
But there are tiers on the rates for conventional loans. So oftentimes, if you get beneath 680, it is better to go FHA than it is to go conventional.
Okay, so then our next loan type would be, the main loan type would be VA.
VA. Yeah, VA is for veterans. Anybody who served in the armed forces, is currently serving in the armed forces, or the reserves. And so as long as we can show a DD-214 for those that are out, we can usually get an eligibility and do a VA loan. Mm-hmm. The VA loan comes with a special caveat, is you can do a 0% down payment.
Yeah, so that's like the nice thing.
It also has a cap, right? So as far as the loan amount you can take out, is it like $500,000, $550,000?
That's ballpark, but sometimes it also depends on your length of service.
Okay, so the question I have with that though is if someone was to purchase a $100,000 home, would they still then have the rest left that they could buy another home with?
You can only use VA for one loan currently at a time.
Okay.
If you have a current VA loan, you cannot have another VA loan.
Okay.
Yeah, so you have to sell, like I've had a client actually refinance a house from a VA loan to a conventional and then use their VA loan for their new house.
Huh.
Yeah.
I've done that often.
Yeah. Interesting.
So I have a lot of first-time home buyers.
There's one more loan type. USDA.
USDA, yeah.
USDA.
Yeah.
For Central Ohio, it doesn't apply all that much, but
Yeah.
Fairfield County, certainly there's some USDA opportunities because it all depends on the property.
Madison County.
Madison County, certainly.
Where's
There are
that's-
some areas in Columbus, though, too, correct?
There are, but very few.
Very few.
Yes.
Pockets, though.
Yes.
Little.
Yeah.
And you can go to the USDA website, just USDA.com, put in
To
an
see.
address, and it'll tell you whether it's eligible or not.
What would be the benefit of a USDA loan?
A USDA does have also zero down payment. That is the biggest benefit.
Right.
But it also has income limits and stricter appraisal requirements.
Does it?
Yes.
Stricter
Yeah.
than FHA or VA?
Yes.
Really?
Yeah.
Like
I
what?
ran into, yeah.
I mean,
Well, I mean, it just depends on the condition of the property.
Uh-huh.
And they also are really picky about how many acres and what type of property, and if there are any outbuildings, things like that.
Really?
Yes.
Interesting.
Yeah, I had a USDA loan not go through because it was a lower level walkout.
Wow.
Yeah.
Wow.
Yeah, I got it. The lender switched, and then I think you might have done that loan. Maybe.
It was not me, but I have seen similar things.
Yeah.
That's
But you
kind of
don't usually see a
interesting.
whole lot of lower level walkouts on USDA type properties. But yes.
So also when we're saying USDA, that USDA pertains to having like more land,
Right.
typically. So just so you know, first time home buyers might be like, oh, I want to use the USDA loan because I'm not a veteran for 0% down, but it does have to be a certain type of home. Well, certain land, I suppose.
Certain areas.
Yeah. So I have a lot of first-time home buyers that ask me, you know, for down payment assistance programs. I think a lot of the times they're still kind of stuck when we had that credit from Obama, that it was like an $8,000 credit
Right.
when you buy a house. We don't do that any longer, but there are still some programs, and I think I've been hearing a lot about the Welcome Home program.
Yeah, the Welcome Home program and the OFA program are the two biggest programs. The Welcome Home program is a newer program, and there's still some roadblocks there as far as them being ready to do all the stuff that they need to do.
Okay.
But the Welcome Home program, it really applies to people who have lower incomes. If you have an income combined family over $50,000 or $60,000, it can get tougher to get done.
Okay.
Okay.
And how much assistance can you be provided with if you say it was a single person making $40,000 a year?
Up to 5%.
5%.
Yes.
Okay, and
So
that
you-
goes towards the down payment.
Well, it can go towards the down payment or closing costs and prepaids.
Okay.
Okay.
So if your down payment is less than 5%, you can use it for other things.
Okay. So could you use it for your down payment and your closing costs?
Well, theoretically, yes.
Okay.
So that would be a great option for people who would have a down payment saved up, but perhaps don't have also the closing costs. They could use it towards that rather than, and I'm
Asking.
thinking, yeah, in such a competitive market that we're in, closing costs, asking for that is usually the first thing people are like, nope,
Yeah.
not going to do it.
And it also enables them to keep a cushion.
Yep. Right. Yeah. That's great. And and you said up to 5%?
Up
of
to
the loan?
5%.
And the Welcome Home program is only good for a certain amount of time. Like we aren't doing it year round.
No, it is not. It's based on how much money they have, so they don't tell you how long that lasts. But in previous years,
Yes.
that's usually March or April.
That's
It
so
runs out.
crazy.
There's a set
like,
amount
yeah.
of money that
So
they
what
have.
happens
set
if
aside.
somebody goes into contract on a house and they plan to use the Welcome Home program and then they find out that it's gone?
Well,
Wait until next year.
you want to make sure that as soon as you're in contract, that your lender submits to save your money, because you can reserve the money. So
Okay.
you should know within the day or two from the time of contract whether
Okay.
you can qualify for that or not.
Okay. That's kind of risky.
Does it get reserved for that buyer then?
It does.
So, so
Until such point in time that they're notified that the buyer is no longer interested. So that has also happened where they tell people all the money is gone, but if you go back 5 days later, they have money because it freed
Someone
up for
backed
people
out.
not.
Oh, interesting.
it's kind of like a gamble.
Yeah.
And in that case, you would probably just switch to the OFA program, which has been completely funded year round for the last 2 years.
And is
The last 2
is
years.
it
I didn't know that.
is it easier, or what would
Well,
the
they're similar. The OFA program does their own underwrite and requires 3 years taxes. So that's the more complicated part of it, but it's not tremendously complicated.
Is it similar in that you have to not make a certain amount for OFA?
Yeah, OFA is a higher limit, though. If you're a single person, it's $102,000. And if
Okay.
you have one extra child in the house, it's like $107,000. So
Okay.
combined income in the household.
And you can still get that down payment assistance. So how much with OFA can you get? Is it still the 5%?
Well, you can actually, OFA qualifies you with 0, 2.5, or 5%. So many people will use OFA if they're a first-time home buyer
Okay.
at 0 and have their own down payment, but they grant you a great rate. The current rate on that for an FHA loan is 3.25% on a 30-year loan if you
That's
have
really
your own
good.
down payment. That's a fantastic rate.
So that you have to have, so that means that you could use the funds for closing costs.
Well, actually, no, you would be getting no money,
Oh,
but
you're
you
just
get the
using
grade.
it for the interest rate.
That's right.
Okay.
Because the standard going today FHA rate is probably 3.5 to 3.75.
Okay.
That's
But
interesting.
Most people are going to use OFA for the down payment
That is
assistance.
correct.
Okay. And it also goes towards their closing costs, is right?
That's correct.
Okay.
Yep.
So you can use it for both.
OFA does have, now they do have to stay in the home a certain length of time, correct?
That's
Otherwise,
correct.
there's a penalty. Does the Welcome Home program also have a penalty attached to it?
The Welcome Home program does not.
It's just money.
Yes.
Yeah, free money.
Yeah. If you can get to it.
So what's the penalty for the OFA?
Okay. So with OFA, you have to stay in the home and keep the same loan. You can't refinance either.
Oh.
For 7 years.
Okay.
If you're a first-time home buyer. If you leave earlier than that, sell the house. You absolutely can't refi without paying it back. You have to pay it back also. But they have come up with a new program that as long as you're moving within the state of Ohio and you can show that you move from your house to another place in Ohio, they will forgive you.
Oh,
Yeah.
how nice of them.
Yep. And it's a little different for the Ohio Heroes program, which is also under OFA, but we'll get to that.
Well, let's do it.
Yeah, let's talk about it.
Why waste time? Let's get there.
So Ohio Heroes, you qualify if you are a police officer, fireman, EMT, nurse, or teacher.
Okay.
And that program, you only have to stay 5 years, and they forgive 20% per year. So if you leave after 2 years to move out of state, you only owe 60% of the money back. Whereas the first-time home buyer, it's not forgiven at all unless you're moving within Ohio.
Is that the same thing as like Hometown Heroes?
It's
Similar.
similar, but it's not the same thing. The
Okay.
Ohio Heroes program is probably the best down payment assistance program available.
Okay, and is that 5% as well?
5% max.
Okay.
You could do, again, 0, 2.5, or 5.
Okay.
Income requirement?
Income requirement is the same.
Okay.
I mean, that's a nice incentive.
That is a very nice and deserved.
I don't know that I've ever had anybody use it.
I haven't.
I have done many.
Have you?
Yeah.
I guess we just don't work with
teachers
heroes.
love it, and I happen to know a lot of police officers, so
Heroes don't like us.
I like heroes. Buy a house from me.
We're kind of heroes.
I'm a hero in real estate.
Oh my gosh.
Yeah.
Is there anything else that you think that first-time home buyers should know?
So many things.
the most important thing, as far as I'm concerned, is get a pre-approval.
Mm-hmm.
And if you think you're 6 months or 8 months or a year away from buying a house, talk to a lender now and check your credit, because if there are things out there that you don't know about, it gives you time to have them fixed.
Yeah. And, we have this conversation so many times with people that they're like, I want to find a house first. Well, that's just not how it works, because we're always like, get your pre-approval, because there might be things on your credit that you don't know about. You don't know what you're comfortable, because a lot of times people don't factor in, I don't think, taxes and insurance. And they're like, oh, well, my payment's only going to be $500. Well, it's not, especially if you're getting in a school district and things like that. Even downtown taxes are getting so expensive. So obviously we've had the conversation multiple times with multiple people.
Yeah, and I always like to stress too, just because they're talking to you does not obligate them to make a move right now. I mean,
Right.
it's best to have that conversation first, see where you're at, if there's work you need to do. And you all are the lenders,
Right.
you are the best source for
Right.
getting people on track. You can tell them as far as, if they have stuff to pay off, what would benefit them to pay off first or not, or, how.
I agree completely.
Yeah.
And a lot of people believe that they know what their credit is, and the services that are provided out there these days are a lot better than they used to be, but they're never completely accurate.
They're never.
Right.
And you never see the whole picture unless you actually have somebody who can pull credit, which is typically just your lenders.
So maybe explain that too, if you can, quickly. What are you looking at versus what's available in an app or online?
Well, I get to see public records information, which is often not included in any of the apps. Mm-hmm. So if there's any outstanding liens or judgments that have been filed that could be affecting your credit score, not only affect your credit score, affect whether you can even be approved for a mortgage loan. Mm-hmm. And I also get to see the whole picture. So I get to see going back 10 years instead of the
quick
applications that are just basically looking at what's current.
Right.
So people are always like, I don't want to talk to a lender because I don't want my credit to hurt even more. Like, I don't want it to go even lower. So, I mean, what do you think about that?
I think that's short-sighted because one credit pull will go away and it barely dings your credit. And yes, it does, but it's just a small ding as long as you don't have continual credit pulls and you're not applying for 10 different credit cards.
Right.
And you then get to know, or at least if you have a decent loan officer who will tell you, okay, you need to concentrate on this. And maybe tell you, okay, these medical bills, don't worry so much about them, but let's pay down these credit cards.
Because there's certain things that are almost forgiven, like, you know, like student loans don't take, they don't hurt you as hard as your car payment or something like that.
That's very correct. And in the lending world, oftentimes with medical debt, it'll be ignored. Now, it still affects your credit score, so it affects what rate you qualify.
It still affects something.
Yes.
Right.
But it can be often ignored completely as far as a debt.
Yeah.
Lost my thought. How long is a pre-approval good for? So if someone did come and say, okay, I want to get pre-approved, how long does that last for? Because with the market, again, being so competitive, oftentimes people are not getting that first house or second house or third house they're writing offers on.
Well, we typically say 90 days as long as you close within 120 days.
Okay.
Because after 120 days, we have to rerun credit because Fannie and Freddie and the FHA will not take your credit without a more recent update.
And these home buyer programs, the down payment assistance, closing cost assistance programs, those also stay in place for you. Like if someone qualifies for that, that will also stay in place if they don't.
That is especially OFA, just because we know the funds are there.
Right.
But some of the other ones where you're dependent on funds will not stay in place, and you need to check when they're ready to put an offer in whether there's still funds available.
Okay. Interesting. Yeah.
That's tough.
It is tough. And I know that that's often what people are afraid of. They get the credit pull, it hurts their credit, and then they've got the pre-approval, but we're not finding a house they want. Right. So I get it.
I mean, I get it too. It's just, you know, and another reason I always tell people to get pre-approved is you need to know what you can afford and what you're comfortable affording.
Well, I think that's it's
huge. And you don't know until you talk to a lender. And I always say, like, hey, let them know, like, the payment you want to stay around. And then we can find, you know, a good, you know, place for you to be when purchasing.
Yeah.
I totally agree. Simply because they can also pinpoint area because property taxes can vary widely. If you're buying a house in Pickerington or, let's say, Pataskla, your property taxes are one thing. If you're buying in Granville or New Albany, they're entirely different set of property taxes.
Yeah, and that does, and we always like to stress, it's the acronym PD, principal, interest, taxes, and insurance, and that's going to be your entire payment per month.
Yes, it's a lot easier to estimate insurance, but taxes, unless you know, I usually tell all of my buyers, when you're getting ready to make an offer, just send me the address so I'll do the numbers real quick. So I can tell you where you're at.
Yeah, we can estimate. I mean, I have a calculator. Can plug in taxes.
Yeah.
But as far as insurance for a house for a year, average, what would?
Well, a lot of it depends on bells and whistles, but typically somewhere between $70 and $90 a month because you do everything based on a monthly payment. So you're typically talking somewhere between $800 and $1,200 a year.
Yeah, I usually figure 1,000 just to be on the safe side.
It's a good number.
Condos are much cheaper though.
Yes, but you have condo fees.
Sure, but I mean as far as insurance.
Yeah, usually 30 to 40 a month.
And that is very dependent on the condo because if it doesn't cover the exterior of the condo, then it's going to be more. It's going to be just like a regular house.
We just had one of those.
Really?
Amanda and I
were
closing on one at the end of the month.
Did you just learn this?
No.
Oh.
I do too.
I did not know that. I didn't. I just assumed it was because all the associations cover the outside of the house unless it's a townhouse.
That's not true. So it depends. Your condo fees will typically be less, But there are condos that, the condo fees could be around like $150 a month and they still don't cover the exterior.
Interesting.
Yeah.
What community was that? I'm just curious.
It's in like Strawberry Farms. I can't remember the name of it.
Interesting.
But like also like the condos in like in Galloway, like those.
Well, because I know there are some condos that are not condos; they are shared single-family homes, and those are not covering the outside. That's a completely different. But I didn't realize there are associations that don't do that too.
Yeah, there's quite a few of them actually.
Read the fine print.
Yeah. So I typically, if I look. That's why I always checks to see what's covered, because I always tell people
in the
like,
MLS.
Yeah. So I always say like, hey, this is a drywall in, or this is in a lot of like the multifamily downtown. A lot of them, like those depend like if it covers the exterior or just the interior. So.
You're talking about like the
townhomes, like
duplexes.
the duplexes.
Yeah. So those were duplexes, but then they turned them into condos. So it is a different situation as well. I've done that before too.
Yeah, they're all kind of vary, because I've sold one that was to from a private owner that is doing the association.
So when would that be a surprise for a buyer? Like if you didn't know to look for that, would that come up during the lending process?
Usually, but if it is not spelled out somewhere directly, we can end up not finding out until the appraisal's done.
Oh.
And the appraiser will find out.
Yeah. It's interesting, guys. I don't think I've run into a condo association where that has been a thing. So that's why.
Yep.
Because we're usually getting the appraisal done long before we get the condo done. So
Yeah. And sometimes I know, I've had scenarios with buyers where I've requested the condo docs. Okay. But that'll ding that like an agent or the seller doesn't want to deal with getting you the condo docs, so that can hurt in a multiple offers scenario. So, but how do you hurt someone for that? Like, they just want to know what they're getting into. But anyway,
other people don't care.
So I guess we're wrapping up then.
Yeah. So, talk to us. Talk to a lender if you want to buy a house.
Yes.
Buy a house.
Yes.